There's a building in Brussels where 27 countries meet to argue about wine regulations and carbon credits. They call themselves a union. They share a currency. But when their banks collapsed in 2008, you know who they called? Washington. Not Berlin, not Paris, Washington. Because when the global financial system catches fire, there's only one country with a fire hose big enough to put it out. And that country prints dollars. This isn't about American exceptionalism or patriotic chest-thumping. This is about something stranger, about how one nation convinced the entire world to run their economies on a currency it controls. How the United States built a machine so powerful that even its enemies can't stop feeding it. And how that machine is starting to overheat in ways most people don't see coming. The story starts with a beach resort, a world war, and the most one-sided negotiation in modern history. July 1944, Bretton Woods, New Hampshire. The Nazis are losing, but they haven't lost yet. Most of Europe is rubble. The Pacific War is still raging, and 730 delegates from 44 countries gather at a hotel to redesign the entire global economy. There are two plans on the table. Plan A comes from a British economist named John Maynard Keynes. Brilliant guy. Wants to create an international currency called the Bancor that no single country controls. A neutral reserve system where everyone plays by the same rules. Balanced, fair, democratic. Plan B comes from the Americans. Their pitch is simpler. The dollar becomes the world's reserve currency. All other currencies peg to the dollar. The dollar pegs to gold at $35 an ounce. And America promises, cross our heart, to let anyone exchange dollars for gold whenever they want. Guess which plan wins? Here's the thing. It's not really a negotiation. Britain is bankrupt, Europe is destroyed, the Soviet Union is bleeding, and the United States has 2/3 of the world's gold reserves sitting in a vault in Kentucky. America isn't asking permission, it's offering terms. And the terms are this. We'll rebuild your countries, we'll open our markets, we'll protect you with our military. In exchange, you use our money. Every other country looks at the smoldering wreckage of their economies and says, yes. Just like that, the dollar becomes the center of gravity for global trade. But the promise, the thing that made this whole system legitimate, was gold. The dollar was supposed to be as good as gold, literally. That was the anchor, the constraint, the reason everyone else trusted the system. 27 years later, America breaks that promise. August 15, 1971. President Richard Nixon goes on television and tells the world that the United States will no longer convert dollars to gold. He calls it temporary. He blames speculators. He says it's for the good of the American worker. What he doesn't say is that America spent the 1960s printing way more dollars than it had gold to back up, funding a war in Vietnam, building a welfare state at home. And when France and other countries started showing up asking to exchange their dollars for actual gold, the math stopped working. So Nixon just ends it. He closes the gold window, cuts the anchor, and the entire global monetary system starts free-floating on nothing but trust. Economists call this the Nixon shock. The rest of the world calls it a betrayal. But here's the twist. It doesn't matter. Because by 1971, the machine is already too big to replace. Global trade runs on dollars. Oil is priced in dollars. Central banks hold their reserves in dollars. Switching would mean unwinding millions of contracts, repricing every commodity, rebuilding the entire infrastructure of international finance. No one wants to do that, so they don't. Instead, they accept the new reality. The dollar isn't backed by gold anymore. It's backed by something more powerful: inertia. Here's how the system works now. Every day, trillions of dollars move around the world. Companies in Japan buy oil from Saudi Arabia, priced in dollars, even though neither country is the United States. Factories in Vietnam sell shoes to customers in Germany, invoiced in dollars. A Chinese company borrows money to build a factory, denominated in dollars. This creates a problem for everyone who isn't America. If you're running a country, you need dollars, not because you love America, because the global economy runs on them. You need dollars to buy energy, to pay debts, to stabilize your currency when things get rocky. So you accumulate dollars by exporting stuff, and you park those dollars in the safest, most liquid asset on Earth: U.S. Treasury bonds. Right now, foreign governments and institutions hold over $7 trillion in U.S. debt. Japan holds more than $1 trillion. China holds close to $900 billion. Even countries that openly hate the United States buy treasury bonds because there's no alternative that's nearly as safe or liquid. This gives America an absurd superpower. The U.S. government can borrow essentially unlimited money at cheap interest rates because the entire world needs a place to park their dollars. No other country gets this deal. When Turkey or Argentina borrows money, investors charge them punishing rates because there's real risk of default. But when the U.S. borrows, the world lines up to lend. It's not because America is more responsible with money, it's because the dollar is the system. And the system has a flaw. There's this paradox in economics called the Triffin dilemma, named after a Belgian economist who saw this coming back in the 1960s. It goes like this. For the world to have enough dollars to conduct trade, the United States has to run deficits. It has to send more dollars out than it takes in. Otherwise, there's not enough liquidity in the system. Trade freezes up. Everyone scrambles for dollars. But if America keeps running deficits forever, eventually people start to doubt whether those dollars are actually worth anything. You can't infinitely expand supply without consequences. So the dollar's role as global reserve currency requires the United States to weaken its own currency over the long term. The system only works if America slowly undermines itself. And that's been happening for decades. The U.S. has run a trade deficit almost every single year since 1975. The national debt has exploded from less than $1 trillion in 1980 to over $34 trillion today. The government borrows trillions of dollars every year just to keep the lights on. In any normal country, this would trigger a crisis, currency collapse, hyperinflation, economic catastrophe. But not in America. Because the world still needs dollars more than it needs the dollar to be sound. This is the privilege and the trap. Let's talk about what this actually looks like on the ground. In 2008, the global financial system nearly collapsed. Lehman Brothers failed. Credit markets froze. Banks in Europe that had nothing to do with American subprime mortgages suddenly couldn't access dollars to fund their operations. So the Federal Reserve became the lender of last resort to the entire planet. The Fed opened up swap lines with central banks in Europe, Asia, and Latin America, essentially printing dollars and lending them out so foreign banks could survive. Trillions of dollars flooded the global system, not to help foreigners, to keep the dollar machine running. It worked. The system stabilized, and every central bank on Earth learned the same lesson. When things break, only the Fed can fix it. This happened again in 2020 when COVID hit. Markets panicked. Everyone ran for dollars. The Fed printed $4 trillion in a single year, not just for America, for the world. And here's the absurd part. Every time the Fed does this, it reinforces the dollar's dominance because it proves that no other currency has the muscle to stabilize the global economy. The euro can't do it. The yen can't do it. The yuan definitely can't do it. Only the dollar. But this power comes with a price most Americans don't realize they're paying. Because the dollar is the global reserve currency, it's always overvalued compared to what it would be if America were just another country. That sounds good. Strong dollar. America wins. Except it destroys American manufacturing. When the dollar is strong, American goods are expensive to the rest of the world. A factory in Ohio can't compete with a factory in Vietnam because the currency gives Vietnam a structural advantage. It's not about productivity or wages or regulation. It's about the exchange rate baked into the system. So, manufacturing leaves, factories close, entire towns hollow out. Meanwhile, Americans get cheap imports, flat-screen TVs from China, shoes from Indonesia, bananas from Ecuador. The trade deficit grows, more dollars flow out. which the rest of the world recycles back into treasury bonds, which lets the US borrow more money, which keeps the cycle going. It's a perfect loop, and it's slowly eating the American middle class. But the people running the system don't care, because the people who benefit from the dollar's dominance aren't factory workers in Michigan, they're banks in New York, asset managers in Connecticut, tech companies in California. The people who move money, not the people who make things. This is the deal America made, financial power in exchange for industrial decline. And now the machine is starting to crack. Countries are noticing. After the US froze Russia's dollar reserves in 2022, every other government on Earth realized the same thing. If you hold your wealth in dollars, America can take it away whenever it wants. So they're looking for exits. China and Russia are settling trade in yuan and ruble.